My name's Ethan Braid. Today we're going to take a look at a very simple way to stay on top of funding your trust and executing upon your estate planning documents that you were given by your attorney. Trust funding is generally not legal work and merely an administrative task. So the first thing that you want to do when you're embarking on your trust funding journey is just to make a list of all the assets that you own. Now, if you've recently completed your estate plan with your attorney, you probably have this list. But if some time has passed since you completed your estate plan, it's always a good idea to refresh the list of the assets that you hold. I have met with several hundred wealthy families over the last 25 years, and it's been my experience that between 80 to 90% of the time, at least some, and maybe all of the family's assets are not properly titled to the trust, or the beneficiary designations are incorrect relative to the estate plan. There's almost always some type of error when it comes to a wealthy family's asset ownership relative to their estate planning documents. Using a simple planner like I have here can make the trust funding process a lot more efficient and a lot easier. It can save you time. It will keep you organized. Just a simple list like we're looking at. So let's start with some of these assets here and talk about how to get them into your trust. My example planner here is for a hypothetical family, Bob and Sue, and they have assets such as a home, checking account, 401k, IRA, various real estate investments, some private equity, rental homes, a business, and a brokerage account. When it comes to the home, what I often see is that the home is held in joint tenancy with right of survivorship. That's what JTWROS stands for. And so let's say that in this example, Bob and Sue own their primary home. It's in joint name, and their attorney has instructed them to transfer the home to their trust. How are they going to do that? See these action steps here. We're going to prepare a new deed showing the trust is the owner, and we're going to file that with the county clerk for the county that Bob and Sue live in, and that is the process to get their home into their trust. Bob and Sue's checking account may or may not be going into the trust, depending upon the advice the attorney gave them. That's why I left these action steps blank. But depending upon what the attorney suggested, this checking account may go into the trust. It may be transferable upon death to the trust, or it just may stay in their joint name, and then upon the death of the first of the two of them, maybe the survivor would make a decision at that time. 401ks and IRAs cannot be put into a trust. However, for these qualified plans, oftentimes the beneficiary is updated to reflect a trust. And again, this is based upon the advice of your attorney. Does your attorney want you to have the trust be the beneficiary? There are pros and cons for that. There are reasons to do it and reasons not to do it. And so that will be specific to the advice of your attorney. More and more, I see wealthy families with lots of real estate investments. It's a sign of the times. And if you have a lot of real estate investments, you're going to want to pay attention to what I'm about to say. When you invest in real estate, this is most often done through a limited partnership ownership structure. And what I see frequently is that wealthy families, one of the individuals in the family will, in this case we're using Bob, will invest in various real estate deals with a friend from the country club or a contact from work or wherever you meet these general partners. And what happens is the general partner will continue to raise funds. And whenever they raise a new fund, you're on the list, and they're going to tell you how great it's going to be. And of course, you absolutely have to be in this new deal, right? And so before you know it, you have 5 or 10. And sometimes I've seen many families that have over 30 of these investments. So it becomes an administrative nightmare when it comes to trust funding. Know that. So I see this as one of the most likely areas where you could make a mistake with your estate planning and trust funding. Because when you have lots of investments in real estate, it's very easy for one of them to slip through the cracks and not end up being put in your trust. The reason that your real estate limited partnership investments generally are not in the trust is because it's a hassle for the general partner to notify you in advance that, hey, do you have a trust? Should you be putting this investment in your trust? They don't care about that. They're not thinking about that. All they want is your money. So and it's also much easier for you, the investor, to just write a check and fill out the subscription paperwork in your name. So I see this all the time with wealthy families where they find out about a new deal and there's a sense of urgency, right? Oh, we're raising money. It's going to be awesome. You need to get in now. It's going to be so great. And you get excited, and oftentimes rightfully so, and you sign the paperwork and you write the check or you wire the money, and now you're in the deal. You weren't even thinking about funding your trust, right? And so this is what happens. This is how people get off track with their estate plan. Even if you've done your estate plan properly and you went through the process with an attorney and you got everything lined up with your trust, in your trust, everything's great. But then a year or two goes by and you find out about some new great deal that you're sold, and then you sign up for it. And now your assets are not in the trust, and they will go through probate if you pass away and the asset's not in your trust in this limited partnership format. By keeping an organizational planner like the one that we're looking at, you will be much more likely to have all of your real estate investments in the trust, or at least spot the problem areas. And so the way you do this is just outline all the different real estate investments that you have, who owns it, and then what do you need to do to get the real estate investment into the trust? You need to contact the general partner, ask them for an assignment of interest form, and then assign your partnership interest to your trust. And what you want to do is just check these off. You need to stay on top of this. And whenever you invest in a new real estate deal, always want to have in the back of your mind, really in the forefront of your mind, okay, I need to make sure this is in the name of my trust. Private equity investments, such as an alternative intelligence startup where you are invested as a limited partner, will be the same process as private real estate deals. You'll need to contact the general partner and have them get you an assignment of interest form to transfer your interest into your trust. Now let's talk about LLCs. If you are invested in LLCs or own an LLC, the process is going to be a little bit more involved. You're going to need to contact your attorney, and the steps will be different. In our example, Sue has several LLCs that own rental properties. When you have an LLC, depending upon whether or not you have partners or it's a single member LLC that you own entirely, you're going to need to contact your attorney, have them review your operating agreement, and determine if there are any amendments that need to be made to your operating agreement that will allow you to transfer your interest in the LLC over to your trust. You may need to get the approval of your partners, for example. But just know that when you have LLC units, you're going to need to contact your attorney, review your operating agreement, and just make sure that you can assign those interests over to the trust without any issues. The last asset on our list is a brokerage account. Transferring your brokerage account over to your trust is a very simple, easy process. All you need to do is contact the brokerage firm and ask them what their requirements are paperwork-wise to move your assets into the name of your trust. They're going to open a trust account for you. They're going to want a copy of your trust, and then they'll transfer your assets out of your existing brokerage account into the new account, which is in the name of your trust. Very simple process. As you move through your list, transferring assets to the trust and updating beneficiaries, I find it very helpful to use a color coding system. I'm using Excel here, of course, and this color coding lets me know that I have completed the transfer of these assets over to the trust or updated the beneficiary. And using a color coding system like this will just make it easier. You can quickly identify what's been completed and what hasn't, and this will help you stay focused, organized, and make the process faster and easier. Trust funding is an ongoing process. Every couple years at a minimum, you want to refresh, look at your list, look at your assets, and just make sure that your beneficiaries are up to date and that everything that you hold is in the trust. Again, so many times I've seen families who had a perfect estate plan and everything titled properly, and then they got excited about a new investment opportunity or they bought and sold some real estate and they just forgot. They just forgot to put the asset in the trust, and it happens all the time. So if you use a process like what I'm showing you, it will help reduce or eliminate mistakes when it comes to trust funding and beneficiary updates. I hope this video was helpful. I hope this video gets you thinking, helps you better analyze your finances, and overall improve your family's financial plan.